Yes, by the time you watch this video, I have already sold my entire Syfe portfolio. And the reason why, I want to show you something embarrassing. This was my Syfe REIT Plus portfolio. And some of you old-timer may remember back in 2022, I right-sized my Syfe REIT Plus portfolio to $1,000 just to keep it there and see how it will perform. So 4 years later, from 2022, even after all the dividends reinvested from that 1,000 Singapore dollars portfolio and whatever management fees that has been deducted, the ending portfolio value is $998.70. So I even lost $1.30 even after 4 years. And yes, by today, I've already closed my REIT Plus portfolio plus my other Syfe portfolio as of the recording date. But let me be very clear that this video is not a hate on Syfe, because I really think that Syfe is not a bad platform. In fact, Syfe was a very good platform. And the reason why I was able to continue on this investment journey was largely a part of Syfe. In fact, I still think that Syfe is a decent platform because of their offerings. And because my investing philosophy has changed since 2022, Syfe has kept me invested. But really, why I need to sell this portfolio, I think this video will explain it. And I think it matters for every Singaporean investor who really think that or have been told that REITs is a foundation of passive income to achieve your financial freedom with sufficient cash flow. So let's move on. I need to credit where it is due. And I want to be very clear. I really love what Syfe has built. When Syfe came out with Syfe Trade, now known as Syfe Brokerage, they gave out 2 free trades per month. They were also one of the first few who launched the regular savings plan RSP feature automatically by deducting from your bank account directly. So you don't even have to deposit funds. It will link up to your bank account, take the funds automatically, and invest to your RSP. Nowadays, a lot of brokerages, a lot of platforms have already done it. They have this feature, but Syfe was one of the first few. And this feature was revolutionary in 2022, just that it is now very commoditized across different platforms already. But Syfe was one of the first few who started, so credit to Syfe. And back then, for someone like me who was still building up a US portfolio after refocusing out of Singapore market, there was a need to build an RSP investing habit for dollar cost averaging, or we call that DCA. So Syfe was the perfect platform for it because free RSP and automatic deduction. So it kind of lowered the barriers to entry that no other platforms did at that point in time. And remember that in year 2022, trading platforms were not so advanced compared to now. And the good thing about Syfe was that their platform, their user interface was very friendly for beginners to use, so you don't have to navigate a lot of buttons. It is very aesthetic, and even now it is even more aesthetic. So really, the use of Syfe app kept me invested through the 2022 bear market, which I'm very grateful for. And you may think that this user interface is a very small thing, but I can assure you that when you're starting out as a beginner, the easier and hands-on that you can start, and especially one that can help you weather through or tahan through the bear market, you'll find this very important. So thank you to Syfe who has helped me all these years. But let's move on to the current date. As I progress to a more advanced investor, my platform needs have changed. And I want to explain honestly where this journey has taken me. And if you're new here, my name is Chris, an ex-chartered accountant, now a personal finance YouTuber, and you can follow me on my Instagram because I only have 4,000 followers there. So help me out, thank you. Now back then, when I right-sized, I was still invested in Syfe REIT Plus portfolio because I really want to see, can Singapore REITs make a comeback after the high inflationary and interest rate period in 2022? Because I think a lot of people right now are still invested in Singapore markets predominantly because of REITs. So this Syfe REIT Plus portfolio, they track the index called the IHS REIT Leaders Index. And that means it holds the 20 largest Singapore REITs, for example, like Keppel DC, Mapletree Logistics Trust, Capital Land Integrated Commercial Trust, and Ascendus REITs. So we are talking about retail malls, industrial warehouses, commercial spaces, data centers, all under one roof. And the good thing about Syfe REIT Plus is that the dividends are automatically reinvested, so you don't have to do the manual investing yourself. So on paper, it sounds like a well-diversified real estate property portfolio in Singapore, right? And in Singapore, I think we are always conditioned to become landlords and then collect rental, passive income, do nothing and collect rents. So that was the main narrative even until now, that all these cash distributions, they will come in as a form of income for you to sustain your retirement life. But here is what most people do not fully understand about REITs structure. Now, REITs are legally required to distribute at least 90% of their taxable income as dividends. This is just so that they can have a tax advantage. So they need to do this. And it sounds like a really great deal, right? The company returns 90% of their taxable income to shareholders there. They are giving out free money, right? But do you know what this means also? The REITs can almost never reinvest their own cash back to their own business because there's almost no retained earnings. All these earnings are distributed out to shareholders already. They cannot reinvest in their own growth. So every time when a REIT want to purchase or acquire a new property, they have to take on more debt financing or they have to raise equity financing by issuing more units, also known as rights issues, private placement, and that means diluting shareholders because more shares are pumped into the market, which means the market value of each share is worth less now in your hands, unless you go and subscribe to the new rights. So this is a structural constraint that rarely gets mentioned when REITs are marketed as passive income. Now the yield looks really attractive, right? 4, 5 or even 6% per annum. That's the compounding story. But here's the thing, they cannot really compound because there's no growth. And when there's no growth, the price of the REIT itself would actually struggle because there are no good news. So let's take a look at the performance reality since 2022. I'll show you what happened to S-REITs over the years. Starting from 2022, S-REITs got crushed by rising interest rates. When interest rates goes up, borrowing cost goes up, and the operating cost of REITs goes up as well. That means that the net income may decrease as well. And that means your distributions may be jeopardized. So whatever distributions that you receive are cancelled out by the loss in capital gains. And in fact, the IHS REITs Leader Index fell by 11.94% on a total return basis that year. How about in 2023, did things improve? If you look at S-REITs, they stay depressed as rates remain elevated. There was a modest recovery, but nothing spectacular. The REIT index returned around 5.08% in total returns, which is just as good as their distributions, right? There's almost like zero capital gain. Because the market was waiting for an interest rate cut, there is still getting delayed. Now in 2024 was the defining year and should make every REIT investor stop and think. The STI itself delivered 23.5% total return. I'm talking about STI, Singapore market. And that was driven heavily by the top 3 banks, DBS, OCBC, UOB. And at the same time, do you know how much the REIT index gained by? Oh, sorry, not gain. It's a loss of 7.3% total return in 2024. This is even after the dividends are reinvested. So can you imagine? Okay, following year 2025, which was last year, did the REITs make a comeback or not? Finally, yes, they did. They recovered with double-digit gains as the outlook became more positive. The S-REITs Leader Index returned around 15.42% in 2025, while the STI, do you know how much it returned? 28.6% total return, almost double it already. So across 3 full years, my $1,000 in Syfe REIT Plus is now worth $998.70. I even lost money, $1.30. Can you imagine if I put 100K inside? And even the STI has recovered, but not Singapore REITs. If it's a global market index fund, the same period would have turned the $1,000 to significantly much more. But I want to be very clear that this is not Syfe's fault, okay? Syfe is just having a product with REITs. So it's just that I want to fully exit my position or my minute position in REITs for this experiment of 4 years. Now let's go on to the reasoning why REITs structurally struggle for wealth builders. And I want to be very fair here in case someone says cherry picking. 2022 to 2024 period has been brutal for S-REITs. And that was due to the high interest rate environment. But even in better times, do you know that REITs suffer from 3 structural problems that are underappreciated? Firstly, they cannot retain earnings. Like I said, 90% of their income will go into shareholders' pocket as distributions, which makes you all happy. But the company itself is suffering. The company cannot reinvest their own earnings to acquire more properties, to do more R&D, to get better assets. You see what a great company do? They reinvest their profits so that they can build more value for shareholders, hence the share price will rise. REITs is the opposite. They cannot do that, otherwise they do not have the tax advantage. Second, REITs must grow through acquisition, right? They acquire more property, they have more assets under their management. That's generally how a business should grow, increase the AUM. But in order to increase the AUM and acquire more properties, they will need debt financing or equity financing. And every time they do a rights issue, it's diluting your own shareholder ownership. And this is why the unit prices stay stagnant even as the portfolio grows. Thirdly, REITs behave more like interest rates instruments compared to equities. When interest rates are low, they will shine. When interest rates are high, they will suffer. For long-term wealth builders and investors, this means that your investment in REITs are more affected by the central bank's decision to raise or drop interest rates rather than the fundamental business performance. So it is really like speculating really whether the Fed will rise or drop the interest rate. So for someone in retirement who needs regular income without selling assets, I think REITs make sense because you don't really care about capital gains really. You just need regular income and it forms like a safety peace of mind for you. Every month, every quarter receive some distributions. But for someone in their early 30s, 20s, or even 40s, right? If you already have a job giving you monthly salary, you have quite a good 20, 30 years to retirement, and that's a good runway. You really need the compounding power of a total return from global diversified broad-based index funds, okay? And if you are focusing truly on REITs, you're kind of like jeopardizing your own future. I know that the monthly or quarterly distribution feels really short. You keep receiving money and you think it's free money, but I can assure you it is not free money. It is just taking out from the earnings. Now, I say a lot about REITs already. I go on to my other position, which is the Syfe Brokerage. So in my Syfe Brokerage, last time it's called Syfe REIT. I hold the Nasdaq 100 Index ETF, QQQM. And the market value is around $28,000 with an unrealized gain of $15,000. And that means the capital I put in was only $13,000 over the same period of 4 years. So can you see the difference already? And I did this through RSP, regular savings plan, which means I dollar cost average into the market every month. My QQQM average price was $134.91. Current market price when I sold was $297. And that means a growth of 120%, which is more than double after 4 years. So why am I closing a position that has grown more than 100%? Now, I started doing this RSP twice monthly through the Syfe RSP because they offered 2 free trades, which means 0 fees, so it's easier for people to start. And in fact, I didn't start with QQQM. I started with an individual stock, which is Google, GOOGL. So at one point in time, I wanted to focus less on individual stocks and move more to broad-based ETF. So QQQM was the answer. Then when I reviewed my portfolio this year, 2026, there was a lot of overlapping positions between my SPYL and QQQM. The top names are just that few magnificent 7. So if I add QQQM on top of my existing S&P 500 positions, I think it is just a huge overlap and it's kind of redundant. It is not diversifying, it is just over-concentrating into the tech sector. So if I need more global diversification, it should be coming outside of US markets, outside of large caps. And all these can be bought on interactive brokers where you can buy Ireland domiciled UCITS funds. So like I mentioned earlier, by the time you watch this video, I already closed out all my positions, whether in REIT Plus or QQQM. I already sold finished and all these funds are transferred to my interactive brokers account as USD. Then I will use that USD to allocate more to my IBKR ETF positions. And if you're unsure of what kind of world ETFs are out there other than the S&P 500, I've already prepared an all-world ETF PDF cheat sheet that you can download for free on my coffee shop page. No need to pay anything. All I ask for is to just help me scan the IBKR QR code if it helped you. Thank you. And this has no sponsor even. So after liquidating my side positions, all my US portfolio will be entirely on interactive brokers. So that's a clean cut. So I want to be very clear. If you have a Syfe account, should you go and close and liquidate everything like me? The answer is no, because you should always look at your own taste, preferences, and what you need to do. I still think Syfe is a very good platform, just that other platforms have already caught up with the competition. I think it's more important to build the habit regardless of which platform you are on, whether it's on RSP, dollar cost average, or just putting in a lump sum every month from your paycheck. And after IBKR Interactive Brokers have introduced their own RSP recurring buy, I have never looked back since. I just buy on IBKR anyway. Of course, you can argue that Syfe has a much better user interface than interactive brokers, which I will agree, which was why I stayed on with Syfe for the past 4 years to just test out the platform. But as your portfolio grows, your needs will change and you will need to advance with the time. So yes, my journey with Syfe has officially closed, but I'm still partnering with them because I still think they are a decent platform and I will still recommend them to my friends and family if they find the platform suitable for them. And yes, in this episode, I think I spoke too much about REITs and stock chasing dividends because that was ingrained in one of my rules in my 10 golden rules of investing. And that's the framework that kept me clear-minded when I'm investing in my 7-figure portfolio. So if you want to check out my 10 golden rules investing video, check it out right here.